Hey everyone, welcome back to the Desk Report. My name is Mikhail. Today I'm going to go over an SPX 0DTE trade that I did this morning and how I made a mistake, and I want to make sure you do not make that same mistake as I did. So first of all, first thing I do, as always, is look through the morning news. First thing is the Kassia's pre-market notes, which shows what the market did overnight. And we can see here that the structure was SPX spot at 77.83, the put wall is 77.55, 7,800 for the call wall, and the gamma flip was classified as short gamma. The regime was short gamma. So the first indicator was, we've been riding up this high and all of a sudden we're in short gamma, potentially a downside trend to come. When you look at the pre-market GEX and flow, you can see that the spike at 77.50 was, or I should say 77.55, the net gamma there was minus 40.6, which seemed to be the stronger level here. Once the market opened, we generated the Kassia's morning game plan, which showed at the market what was actually happening. And you can see here that the HIRO and Sonar was showing strongly negative at negative 952 M. The net dealer gamma by strike was also bearish. And also the HIRO flow spectrum was showing that there was minus 299 M at strike 77.90. So overall, personally, I was thinking bearish start to the day. You can also see the dealer gamma net below spot is more negative at minus 172 rather than above 165. Not a huge difference. And the same thing with HIRO flow, minus 299 M versus plus 291 M on the call side. So overall, it was slightly neutral to bearish, in my humble opinion. The sell side remains riskier than usual due to correlation spasm. Price is likely to ping between 75.55 and 78.05. Defensive setups should steer clear of negative gamma pockets and favor smaller sizing. In the options flow chart, when you first opened it, specifically on gamma, you can see in previous days, we didn't have very strong negative gamma. We do today. And when the market opened, it was kind of teetering between. And as you can see here, it still is. But overall, if you look at the negative gamma, it's stronger on this side than it is above the strike price. So again, overall, my thought process was sell calls because most likely it's going to be trending down. And if you look at the delta pressure, this confirms it because you have selling pressure above here and then down below here where you see the purple, that's buying pressure. So there's a lot more room to go down than it is to go up. So therefore, if you look at my log here, I set a trade at 9:58 in the morning. Is a vertical call credit spread was around here. This is right where the bearish MACD started to trend. Now, the thought process was correct, but what I missed was that at the time, my sample trade that shows me the call that I should set, the credit that it was giving me was extremely low. In fact, so low that when I closed at 10% profit, it only gave me a net PL of $1.20 after the fees and after taking my 10%. So absolutely terrible trade, to be completely honest with you. And I missed this. I missed the actual credit. So what I was risking was much higher than the actual reward that I was getting. Selling the calls was the right move, but because the credit was so low, it was a bad decision. And so that's the lesson for today. Just because it's the right call to make based on charts and all the indicators, you still have to look at the credit, and that should dictate whether or not you execute the trade. So that's the lesson for today. If you like this video, if you found it helpful, like and subscribe to the channel and check out the Kassia waitlist in the description. Catch you guys next time.